What's up, everybody? It's Rome back with another video. So check this out. Um, in my last video, I talked about how we quitting the Doyle exchange strategy. Now, personally, the reason is because I think that it's too fast, but at the same time, it's too slow. So it just seemed like I just want to go into some details because I don't want nobody to think that, oh, I'm just switching strategies because it didn't work out. No, I was working and I was able to feel it and I was able to see it and I was able to test and assess, do I like this? Is there something else I want to try? Don't be afraid to try something new. Don't be afraid to be like, you know what? This ain't working for me. It's profitable. I can see the results. I see what it is, but it's just not the best for me. So personally, I reread the Candlestick Bible. Let me just show y'all my last trade. These are my last trades. This is to me, this is straight Candlestick Bible stuff that I'm applying. I'm not applying that. You don't have to be the smartest. I'm just applying some straight Candlestick Bible stuff. So a few different things. One, you can make this money by risking a lot. That's what it is. Whether it's the Doyle strategy or but here's the thing. I'm more confident to risk on higher time frames because positions hold better. They don't go spike straight down through some shit. They will news and make some shit happen, but I just got done with these trades at 9:08 Central Time, which means it's like 10:08, which means I'm way past news. So I'm good. But I just don't want nobody to think that I tried the strategy and or I failed or maybe because I can't do it like Doyle, then I'm getting demotivated. Nah, I felt like for me, it felt like it was too much of a gamble. I'm watching zones get completely destroyed, setting up the same thing for like 40% win rate. That's cool when you're going for 1 to 5s because if you win 2 and you lose 3 out the week, you should still be up, which is cool. That's cool. But personally, honestly, it's just a personal thing. I can't see the move, the total move. Like, so if I risk 1.0 on a 5 minute, first of all, it's a few things. One, that's some scalping situational shit, and I would think that's not nothing new. Everybody know that. That's some scalping situational shit. Considering, oh, if you gonna scalp, then you gonna um you're gonna be in and out the markets. But if you're going to scalp on bigger time frames, you can stay in longer. So I'm still scalping. This is still a scalping strategy. I didn't let none of these hit take profit. I closed them all. I got back in when they came down and took some more profit. When the candle closed on a 4 hour and created a pin bar in the continuation direction at a key level, I just bought again. And that's how I got to 318. That shit pushed up so fast. It pushed up so fast. Like it didn't play. It wasn't waiting no game. It seemed like them lower time frames be just fucking with people, man. Like, and after doing them for literally, I think I back tested. I got 3 days of data that I back tested before I started making videos. I started making videos because I was seeing success, and I felt like I really understood the markets in a different way to where I could continue now. Like I want to help somebody, so I want this to help somebody. If you are out there and you're having a little bit of trouble with the Doyle exchange strategy, maybe it's time for you to change your strategy. Now, if you in his course and you getting it and you slowly getting it, so I might say keep going. That might be what it is for you. If you like the feel and the style, that's Doyle's style. But what I learned is it's people with different styles. It's people who swing trade. It's people who weekly trade. Freak an intraday trade, a swing trade, or a scalp. These dudes is weekly swing trade, and they are waiting 1 week here to the next week here. They then did their analysis, and they like, I don't have to worry about whether or not it's gonna fake me out. Nah, this is weeks worth of data. These were big institutional banks doing big things, making big things happen. And when you move with the whales, There's no choice but for you to win. So that's how I look at it. And I got that information from Wall Street Trapper. Shout out Wall Street Trapper. I was watching him before I got into Forex at all. And he's the one of the reasons I got into Forex. He can't even attest or say or know it, but what happened was when I got that $600 stimulus check around COVID, and I'm watching Wall Street Trapper. He like, you gotta invest, you gotta invest. I'm like, look, I can't buy a car with this $600. I can't put a down payment, so I invest. If I lose it, I lose it. Yeah, I lost it, but I learned. So I don't take that as a complete L. I actually feel like I got a dub, especially if you look at what's on the screen right now. So with that being said, I done made my stimulus money back. No, this is a demo account. No, this is not real money. No, I'm not gonna be able to withdraw it. But I'm cool with, and I see here's my only problem is like you have to really be thorough because I can do this on my personal account if I had 5K, but there's a few things. One, am I willing to lose $318? I'm not. If I had $1,000 or if I had a $5,000 account, I think the most I'd be willing to lose is $1,000, and that's not at a time. But I do like my stop loss will be 1,000, a negative $1,000. I'm not going to let it get that low. That's the if shit hit the fan. That's the if a bomb and drop and everybody start hitting the floor, I still got something. But if bombs drop, I don't know if Forex is gonna be anything. So that's just neither here nor there. But my point is, stop loss need to be set. Like you're not gonna see me out here like Wolf on Wall Street blowing his whole account. We got to talk about these things. How did he blow his account? He didn't set a stop loss. He was too confident. He thought he was the markets. So you're not going to catch me thinking I am the markets. I'm ready to lose. I've lost. This is today's money, but let's go back last week. Last week, yes, I'm up. I'm completely up. It's stupid. But I still lost $99 this day, $60 that day, $194 that way, 123, 15, 25, 250. That was my biggest loss by far. It's $254. So to see that, and then to see that my biggest win is 318 on top of a couple other over $100 trades that I was able to take. Candlestick Bible, y'all. Let's get into the chart real quick. So this is the trade that I took. I'm gonna throw my trade history on real quick. Boom, let y'all see what I did. So I traded this candle for two reasons. It was getting close to close, and it's a pin bar. A pin bar is known for going in a continuation direction. So it was in an uptrend. We were at a key level, and it was hard rejecting. And like I said, these are big bank levels, so that rejection is real. When that pin bar closed, it was time to enter the trade. You got a successful bounce off it. So I entered the trade at this candle and at the next candle, but specifically at this candle because on a 1 hour chart, it was close to its key level. Now the 1 hour chart ain't the biggest, but I kind of wanted to get in the trade a little faster, and I wanted to get out a little faster too. So I'm like, if I gotta wait for a 4 hour candle to close, I'm gonna be here for 4 hours. So on a 1 hour chart, I'm like, I see it's at a key level. No, it's not necessarily creating a bullish engulfing candle, but if I'm correct about the inside bar pattern, this is an inside bar pattern. So we got an inside bar pattern on a continuation of an uptrend, or it wasn't necessarily uptrend. It was kind of ranging, which is why I didn't stay married to this trade. And at the same time, it was bouncing off of a key level on a 1 hour. So I'm like, look, it's not gonna sell too much because, in my opinion, because on a 4 hour, it's in an uptrend. On a 1 hour, it's at a key level, so it's also not gonna sell too much because that's at the 1 hour. That's pretty strong of a key level. That's like right under bank institutional level of a estimated moving average. So once I saw that this is a pin bar being created on this key level, the only way I'm gonna I can put my stop loss right here because I'm on a lower time frame. So if I can put my stop loss right there on this lower time frame, and then you go up, you see that this may not be. So I'm gonna put a price right there because real quick, I don't know if that was the low of both lows. So I'm gonna sit that right there. Boom. That's where my stop loss really was. But on the H1, I mean, yeah, that's the spot. Yeah, I put it before that low, and That's a lot of money. If that's a lot of money. If you especially if you can see I risked. Sorry, going back to today. I risked 4. That's all I could. And before that, I couldn't even risk that. I had to risk 3. So, as you can see, the only reason I can even risk 4 now is because I made that money, I think. But you risk it all like that, you're not gonna win every time. As you can see, I had some 1.0 and a 5.0 just to see like what would happen. And like honestly, I know what I'm okay with. And like, yeah, these are big numbers, but it's a few things that I'm doing. One, I'm training my brain to see these numbers and be okay with winning or losing. I lost $250 for the first time. You feel me? Like, and that's actually not true because I actually lost $300 once trading a live account with $1,000, not knowing that my lot size was too big, trying to hit off US 30 on a dumbass strategy I learned at IM Academy called the 54 cross. Basically, when the 50 and the 4 cross and then and it retest, uh, it basically was supposed to continue, but it was supposedly can get you up to 1,000 pips. Like, it didn't work. Simple as that. It just was not foolproof. It's like it may work if you got all of these things. Like if you on a 4 hour chart and you doing this and you doing that and you got these key levels all on a 4 hour chart and you understand that the banks is doing what the banks doing, then you happen to go down to the 15 minute and it happened to be crossing and it happened to be at that level, then it'll work. And I think that's what was happening some of the times. I think that they were looking at these charts the same way I'm looking at these charts now, coming up with some bullshit strategy like, oh, this happened to happen. The 50 happened across the 4 when I was about to take this $318 trade. If I tell them that, then they'll know that. And then when it don't work, they'll come back for more. This is what I really think. And I may be lying, but I know one thing. The markets wasn't against me. It felt like them people was. Like, the markets is just a war between buyers and sellers at every candle, at every turn, at every key level. It's just a war. As soon as the candle open, the buyers and the sellers are fighting. What's going to happen? So, knowing that, all we can do is move with the whales. If the war is this bank versus this bank, these niggas got $1 trillion versus they $1 trillion, and they moving them motherfuckers, and they moving them motherfuckers, and the price is going up and the price is going down, and then you see that strong push to the upside. You can grab the coattail of the bank and be in. You move with the whales. That's how entrepreneurs work. They move with the whales. So that's all I really wanted to say today. Like I said, I am done with the Doyle exchange strategy. I even try. You know what I noticed? I noticed on the bigger time frames, it doesn't. His setup don't come as often. Like here, this might be considered that setup. A strong push to the upside. We had an indecisive candle. But see, here's what I also learned. So real quick, this candle right here is that candle, and it hit the zone, and it did that thing. It did the thing it do on a 1 hour. A few things. One, this is the 1 hour. I don't really trade as much as the 1 hour. I look for entries on the 1 hour, but I trade the 4 hour. I tried to trade the 4 hour, and that's it. Still buying. Like I could have still been in the trade. It would have came back down. I would have been back up. Especially if I didn't close. If I didn't close right here, that line would have been there, and I would have just had it all. But I closed, got back in because I realized it was a pin bar formation, and it closed at 9 o'clock. So yeah, I forgot my very initial point, but this stuff can be done, man. You just read you a book and do what it takes. Oh, I remember because I created this zone. This zone right here, we look for buys at this zone when we see a rejection. The problem is we could have got in on this move because this, if I'm not mistaken, is considered an inside bar pattern at a key level. That 8 is key. That 8 is key. And we done created a floor, so now we in an uptrend. We got us a that's actually a bearish engulfing candle. I wouldn't know what to do with that one. But it's created the floor. It's created the uptrend. It's created just a tiny small bit of support. And then on its way up, it created that black candle right here. That black candle could be considered an inside bar pattern which means that the pattern is going to continue, which is a place you could have possibly got in. It's at a key level, that 8, and I just feel like that could be it. I don't know enough yet, but I do know that it's like the opposite of a bullish engulfing. It's a bearish inside, and that's also a continuation. And instead of waiting for the price to shoot here, come back down, touch your zone, and then buy again, we can literally just get in on this candle and ride that to the top and be done. We ain't had to ride that down. We ain't had to ride that up. That was an inside candle. It's okay. Your risk won't be too much. Be okay with losing. We see so many times do we see in the chart where we have a single color candle, and because boom, we in an uptrend here, single color candle. It continued. Uptrend here, single color candle. Pull back, continue. Like, we seeing this. So you can't be scared. You have to be confident. Figure out what's what. Why key levels are key levels. Even in a downtrend. All this stuff works, man. All this stuff works. This is rangy as fuck. That's choppy as hell. I ain't never seen nothing like that. That's on a 1 hour. But hey, it works even better on a 4 hour. When you going and you looking and you looking and you're looking, so boom, right here we got us an uptrend. Boom, this is the start of an uptrend. It went up, it pulled back, it went up, and it here could have been one, but the problem is it did that one lost. That's the problem there. This one could maybe consider one. I know they're a little confusing on how they work, but this may be considered some inside bars. That first black one, not necessarily, but that second black one is definitely an inside bar at a key level, and it kind of looks like a pin bar. So with that being said, there's just little things you could do that work. If you was like, you know what, I'm gonna get in here. This is a good spot to get in for a few reasons. One, we had our engulfing pattern, so we know that it wants to buy. It busts through, and then it's a key level. The key levels are important. So you got a key level, you got an uptrend, and you got a signal. That's what you need to enter trades. Boom. As we keep going, we got another one here. But that's not an inside bar. That's just a continuation looking bar. This one looks like an inside bar. So here, somebody might want to take that. Like, I don't know exactly. I think it has to happen more towards the top of the move, but it is what it is. An inside bar is an inside bar. Let's see here. This ain't an inside bar, but like I said, I'm noticing there will be a singular black candle. That's also not an inside bar, but you can see like things happen that'll show you. Like this is a really great example. It's not necessarily at a key level, but we see that we are in a strong downtrend. That candle would have formed. You put your stop loss right here, and you continue in the trade, and you happy that you in. It would have retraced to that 50. Let that shit retrace to that 50 because they said it will, and you get in your trade, and you got an even better, tighter stop loss, and you ride that boy on down. Let's see how far down that mug went. Let's see. So if we right here. That mug, okay, wow. Well, let's see. It came all the way back. That'd have been scary if you was like, I'm gonna just ride this trade, and then it dropped, and it came back, and you were like, okay, and then it dropped, and you was in good profit, and then it came all the way back. That seemed like it would have been a little scary, but it eventually hit the floor before it said, I'm gonna reverse. That's crazy. I just think that's what's up, man. Like I said, man, I'm not quitting trading ever in my life, man. So I just wanted to show y'all what's going on and how we are maneuvering nowadays. So this is where our account is at. It's not luck. It is not luck. There's two type of people in this world. You got the excuse makers and you got the non-excuse makers. Simple as that. Which one are you? Peace.